Hello, everyone. My name is Philip Palumbo. I'm the host of the Palumbo podcast, where we interview some of the most successful founders of businesses to learn how they got to the top, as well as interview some of the most prominent market strategists, economists, and portfolio managers. Today, we have with us Anthony Scaramucci, who's the one and only. Anthony Scaramucci is managing partner of SkyBridge Capital, a global alternative investment firm overseeing $3.1 billion. In 2022, Scaramucci was ranked 47th in Cointelegraph's top 100 influencers in crypto and blockchain. In 2016, he was ranked 85th in Worth Magazine's Power 100, the 100 most powerful people in global finance. He is also founder and chairman of SALT, the incredible global thought leadership forum and venture studio. He's also an author of The Little Book of Hedge Funds, From Wall Street to the White House and Back, and finally, The Little Book of Bitcoin, what you need to know that Wall Street hasn't already figured out. Anthony, thanks so much for your time today. I'm super excited to have you on the show.
Well, I mean, it's quite an introduction. You're the man. Okay, you're also fellow resident of my hometown, right? So we jive, you and me. We got a lot of kids in common, don't we,
We
Mr.
do.
Palumbo?
We sure do. We sure do. And your kids are doing great. So again, thanks a lot for being on. So Anthony, I want to start off first with a couple of tweets, both from you and Michael Saylor, and then talk about the word disruption. There are a few words that we're going to talk about that relates to your book that I think is very important for our audience to know. So you tweeted, "For the record, I don't know what a Bitcoin is and could care less, caveat emptor." And you said, what embarrassed you the most about that is not so much that if you invested in Bitcoin at that moment, you would have made millions, but more because it's that you had a closed mind. Michael Saylor also sent a tweet out in December 13 that Bitcoin's days are numbered. It seems like a matter of time before it suffers the same fate as online gambling. And then I just want to preface, we talk about disruption, and in your book you say, "I know many people, and particularly those who are already rich and successful, abide by the old adage, if it ain't broke, don't fix it. But the better advice is this, if it ain't broke, break it." And then you talked about Apple disrupted itself by replacing its wildly popular iPod with the even more wildly popular iPhone, which went on to become the most popular device in the history of the world. Netflix, which owned the mail-in DVD space, totally disrupted its own business several years later by introducing streaming. Years after that, it became the biggest content creator in the world and toppled Hollywood. And then finally, you said, Bitcoin is Netflix. Bitcoin is the iPhone. Bitcoin is the inevitable pull of progress that will level everything in its wake. You either ride that wave or get ridden. So Anthony, my first question to you, when I talk to clients and they ask me about Bitcoin, what they say to me exactly, I just don't understand it. What is Bitcoin? What is your simple answer to people?
Well, first of all, it's not that easy to understand. So let's start with that. And you mentioned, Michael Saylor owns about 600,000 Bitcoins now. He's one of the richest people in the world, having identified 5 years ago something that he wanted to take advantage of in the Bitcoin space. And by the way, he made his first Bitcoin investment in August of 2020. I followed him into Bitcoin, which is why he wrote the foreword of my book. I made my first Bitcoin investment in October of 2020. And so what I would say to you about Bitcoin, and what I would say to you more broadly, it's very hard to understand. So Saylor is writing, he doesn't like it, thinks it's like online gambling. I say I don't like it, don't know about it, don't care about it. But what I would encourage your clients to do is to learn about it. So you could pick up a book like the one I wrote about Bitcoin, and in there's a pretty good synopsis of what it is. And then if you do homework on Bitcoin, I don't know too many people that have done the homework on Bitcoin and then didn't do anything related to Bitcoin. Right. If there's 100 people that do the homework, I believe 90 of those 100 people will buy into Bitcoin or will accept Bitcoin as an asset. And so I don't know if I'm going to do it service here. I probably will do it a disservice, but here's what I would say. Bitcoin is a technical piece of property that acts like a ledger or a spreadsheet that is fully distributed and fully transparent on the internet, but hardened. And so if I have a spreadsheet, an Excel spreadsheet open, and I'm putting my assets into it, I can manipulate it. But in Bitcoin's case, it's hardened. It's almost like a immutable. You can't move it.
Mhm.
And so you say, okay, well, why would that be important? Why would you want to pay $100,000 a token for that or something like that? And the answer is that's what we've done for 5,000 years. We have technologies. We call these technologies money. And what does technology like money do for us? We use it in exchange for bartering with each other. I brought props because I was ready for you today. So I brought some props with me. And so these are in our neighborhood, Palumbo. These are Italian singles. You see these? Okay. All right. And you know that. Like if I always have them on me because I've got Oreos, got to be ready to pay the money, right?
Always have to be
And
ready.
so let's start with this is a piece of technology. Okay. And so we have this, we trust this, we understand this. But if we were in freshman philosophy class, so I said to you, what is this worth? You said it was worth nothing. It's Google this. This is made out of linen and cotton, 75% cotton, 25% linen. It's got a counterfeit strip on it and some other fancy colors. It's worthless. You know it's worthless. I know it's worthless. However, we trust this. So if I hand this tonight to the maitre d' at Hendrix, he's a happy camper. If I give it to the guy that's parking my car, very happy camper, because he knows this is a piece of fabric that he can trade to somebody else for goods and services. So when somebody tells me that Bitcoin is worthless, this is worth something. We know it's not worth anything, but we've ascribed value to it. And we ascribe value to things that have certain check marks met. This is given to us by a third party. We trust the third party. And so what Bitcoin is basically saying to you is we can create through technology a decentralized spreadsheet. This is a spreadsheet. Look at me. It's on my side. I hand it over to your side of the television set. It's
Exactly
now an
right.
asset for you. Okay, this is a spreadsheet. That's what this is. So Bitcoin is a spreadsheet. And so if you read something like The Ascent of Money, and you read about how we have transacted in our societies, Bitcoin is near perfect for this. It is immutable. It can move quickly over the internet. It moves at the speed of light. It's the first instrument of money that moves at the speed of light. We invented communication by speed of light in the 1840s. That was the Morse code. Tap, 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 speed of light. But the money was moving by stagecoach. We put gold and silver bars on a stagecoach to move the money. And so we're now can move the money at the same speed that we can move our communication. And so your clients are probably having their eyes glaze over as I talk about this, but if they understood what I was saying, they would be like, okay, I get this. This is going to be the future. This is like digital gold. Gold has a 5% value. If it's just based on the manufacturing, it's got a $23 trillion value. If it's based on the perception by our fellow citizens of the earth. And so, yes, is it valuable? It is because it's a spreadsheet. Your bank, by the way, is also a spreadsheet. I have money in an account. There are digits in that bank account. Let's say there's a Rally Mercedes, which is up on Northern Boulevard. If
Right.
I call them, I say, I want a G Wagon. They say, you do? Yes, I do. Okay, it's $218,000. Okay, great. I have digits in my bank account. Are they worth anything? They're just numerical digits. They're going to go down in my bank account. They're going to go up in the bank account of the Mercedes-Benz dealer, and the Mercedes is going to get delivered to my house. It's a spreadsheet. And when you understand that your money is a spreadsheet, and I just told you I made a perfect instrument of technology where I now have an immutable spreadsheet that's unchangeable, and there are certain amounts of tokens on that spreadsheet that we can use with each other to transact with. Lo and behold, you get it. Larry Fink couldn't get it, hated Bitcoin.
None of these guys.
Saylor hated Bitcoin, got it, now owns 600,000 Bitcoin. I didn't like it. Now I've got $1 billion worth of Bitcoin for my clients and myself. Larry Fink did not like Bitcoin. Did not like it. 2021 did not like it. By
Absolutely.
2024, he has the most successful Bitcoin ETF in the world. So I would say to your clients, there's some very, very smart people that are involved with Bitcoin. And I'm not saying we're going to be right because I have been humbled by life and I've been humbled by markets, but I might be right. And if I am right, it's going to be transformative for myself, my family, and for my clients. And so I wrote a book about it so that I could explain to people the odyssey that I experienced going into Bitcoin. And I could hopefully get them over the hump where they could put some amount of money into Bitcoin alongside of me.
And I can tell you after reading your book is an epiphany went off of me and more and more and more I'm getting sold on it personally as well. So my main objective, Anthony, in this podcast is to, as I always love to do, is take the complicated and make it as simple as possible so people can understand. Because I really do believe, Anthony, when people understand something, they'll execute. So that's really my goal and objective. So what I want to get to next, and this is where it does get a little murky, but I think it's important for people to understand a little bit. And I don't want to get too crazy about this, but I mean, and you brought this up in your book too, Satoshi Nakamoto, right? So I got to tell you, what threw me off the most about Bitcoin, Anthony, when I'm like, all right, who invented this? And somebody I'm talking to said this guy Nakamoto, Satoshi Nakamoto. I'm like, okay, well, who is this guy? And it was like, well, no one knows, and maybe it's a group of people. So and this person or people that created this wrote a white paper and essentially created this perfect technology where they limited the amount that could be mined, which is 21 million, and decentralized it. And it literally is like a perfect technology. And it's tried, and Bitcoin's tried to be copied 6,500 times or 6,000 times and was unsuccessful. So just in quick terms, Anthony, when we talk about this guy, Nakamoto, right, this does throw people off. What is your view of that?
Well, again, you could pick other things. We've used wampum, we've used seashells, we've used gold coins with Roman emperors' heads stamped on them to be representations of money
Right.
over the course of human history. So, the issue related to Bitcoin is it got there ahead of all the other digital assets and it scaled and it became acceptable. And so there is a self-fulfilling prophecy or a flywheel of acceptability. As it grows, it becomes more and more acceptable. Could you replicate a Bitcoin and call it something else and try to get it to scale? Yes, you could do that, but that's not how the technologies work. You have this has become an operating layer for the future of money. And so it's the same way that I'm talking to you right now from an Apple operating system. You may be on a Microsoft operating system. 25 years ago, Apple only had 3% of the market. It was because they developed the iPhone that they were able to grab more of the operating system market. So again, I'm not saying that Bitcoin will be the only store of value, but I am saying that it has reached escape velocity to
100%.
be treated like an asset class and a store of value. Now, if you have gold, do you also have silver? Yes, you do. Do you have palladium? Yes, you do. Do you have platinum? Yes, you do. But which one is the big kahuna? Well, gold is the big kahuna of those precious metals. And as a digital asset goes, Bitcoin has reached escape velocity. And so I believe Bitcoin will be that asset. Now, if I'm wrong, okay. But, I bought the asset at 20,000. It's trading at 106,000. There's millions of people now pouring into the asset. The federal government under the Trump administration has declared the end of the regulatory war on Bitcoin, and they're now going to try to regulate it fairly and propitiously. I saw Senator Gillibrand last week in New York to discuss the digital asset legislation that's before the Congress. She's a Democrat, a friend of mine, Chuck Schumer. This is a bipartisan commitment now, Phil, to getting this story right for the American people and ultimately long-term right for the globe. So yeah, there could be other assets made. There could be competitive assets. just like there are competitive assets for gold. I'm sure when you sit down with your clients, you say, okay, I'm going to give you some stocks, I'm going to give you some bonds, maybe some real estate or REITs, or maybe some private equity, or maybe you're going to buy a piece of SpaceX, was a private company. And I'm just saying that I think Bitcoin should be in the mix at this point. I think that this is an asset that's trading at about $2.5 trillion. That's, I think, is worth $25 trillion. I think it's worth what gold is worth. And I don't think it's going to get there tonight, but this is a $2 trillion asset that I think can get there over the next 5 to 7 years. And so I don't know too many investments like that in my mind. And so I own a lot of it. And I'm writing about it because I want to educate as many people. And by the way, you're the wrong demographic for Bitcoin. And I would imagine your clients are the wrong demographic for Bitcoin. A 30-year-old gets this in 5 minutes. A 20-year-old gets it in 3 minutes.
True.
I'm sure my son James, once he is old enough to get it, he'll get it in a second. But a 60-year-old like me, it took me 5 years to get it, Phil. And so, listen, but once I got it, I wanted to own it and I didn't want to not be a part of it. And I think that's the same thing that Saylor was trying to say to people in the introduction of my book.
Yeah. So, the way I talk to people about this is that, at one point, somebody said silver is going to be valuable and they started trading silver, right? And then all of a sudden, same thing with gold. And gold became valuable. And I do believe like that is similar to what we're seeing today with Bitcoin, where we're saying it's valuable, but not even we're saying it. But if you look at the market cap, like you just said, at over $2 trillion and 100 million people now that own Bitcoin, it's the way things evolve. And I think that's what people have to understand. And you wrote it in a book and you said money exists in a delicate balance of faith, trust, and order. And if you disrupt any of those elements, chaos can ensue. I think people have to think of it that way, just the way silver was discovered and gold was discovered. That's where we are with Bitcoin. And it's obviously being adopted. You just talked about it with Larry Fink and others and really, really smart people. But I want to move on, Anthony, to problem number one that you wanted to solve, which is when you were doing your research, before you took a position in Bitcoin, you said to yourself, are enough people connected? It's the value of the network. And what you talked about is when it comes to Bitcoin, that network effect is best captured by the number of wallets. And a wallet is essentially how many people, when one person has a wallet, they own Bitcoin. Do we need to wait until Bitcoin reaches at least 100 million wallets is what you asked your partners. The greater the number of users, the more valuable Bitcoin would become is what you said. Apple's real value is not so much, this is what's so remarkable. This is amazing. Apple's real value is not so much that they make a remarkable phone. So it's not about the phone. It's the fact that there are more than 1 billion iPhone users around the world. It's the network, the massive installed base of Apple users that allows the superior iPhone technology to really distinguish itself. So Anthony, when you figured out, problem number one solved, it's about the network. Can you just quickly go through what you meant by that as it relates to what I just talked about?
Yeah. So again, there's value in a network, right? So Robert Metcalf, the professor from MIT, about 35, 40 years ago, they asked him about the fax machine. And he said, well, one fax machine is invaluable. But if you have 100,000 fax machines, now you have this information highway and the network itself becomes valuable. And so what I mean by the network effect, Facebook has the network effect. If there's 3 billion users on Facebook, tonight you and I could create, I don't know, belt book or, ear book or something. We have the exact same technology as Facebook, but it's not going to be as valuable as Facebook. We could have an interface and you could write on it and I could write on it and we can interface with each other, but we don't have the network. So therefore, Facebook is way more valuable. Advertisers would pay more for a bigger network than a smaller network. And so just providing evidence to people that if something's scaled, the network itself is quite valuable, not just the technology and not just the interconnection and the blockchain itself, which is very secure, but just the vastness of the network, right? And so what I said to my staff is I'm a cautious person. I'm a traditional finance person. I've got money trust entrusted to me here at SkyBridge. And I've got to believe that Bitcoin is reaching escape velocity, meaning it's big enough, you know, that it becomes relevant and it becomes scalable. And once it hits a certain inflection point, it'll add more scale. And we are seeing that now. So Bitcoin gets to about 100 million wallets. I want to say January-ish of 2021. We're probably at 300 or 400 million wallets now. But if you factor in all the ETF stuff, I could make the case for you. We have 500 million wallets because you can't,
Right.
if you own $1 million of Bitcoin through BlackRock, I can't see your wallet. BlackRock has one wallet, but the one wallet has $70 billion in it. Do you see what I mean? And
Absolutely.
so to me, I said in the book, and I maintained, I wasn't ready to make that investment unless three things were happening more or less simultaneously. Number one, 100 million wallets is escape velocity. And so it got there. Number two, was I comfortable that it was going to be regulated fairly? And as I write in the book, once Bitcoin was deemed property, it was deemed non-tangible property
Right.
by the IRS. Once it was deemed that, I knew I had protection because we protect property rights in this country, irrespective of party. It's a bipartisan decision that's been made for the last 250 years, and it dates back to the Magna Carta. So you have 900 plus years of precedent to protect property in the country. So I knew no one was going to take my property without giving me something for it. And then the last thing, and I think this was the most important thing, I had to store it somewhere. I didn't want to have a key. I didn't want to have Bitcoin in my pocket. Now, that's a thing we'll talk about in a second. But if I'm going to have 9 figures plus of Bitcoin, or in the case of SkyBridge now, 10 figures of Bitcoin, I got to be able to store it somewhere safely where there's a lot of bells and whistles of protection. But, I once said that Bitcoin was digital gold, and I write about that in the book. And one of my clients from Saudi Arabia, Phil, I met him at a conference. He says, I saw you on TV. He said that Bitcoin is digital gold. I said, yeah, I believe that. He says, yeah, let me tell you something. It's better than that. I said, well, what do you mean, sir? He said, well, let me tell you something. He says, I live in Saudi Arabia. Right now, the crown prince loves me. There's no bone saw in my future. But if he starts to dislike me, I have $300 million of Bitcoin on a USB that's the size of a dime.
Amazing.
And I can stick that where the sun doesn't shine and head for the Yemeni border. Do you think I could move? Do you think I could move $300 million of gold? Okay. And he was just trying to tell me that there's more portability, there's more ease of use. So you have to get over the esoteric things in your head. Well, it's worthless. It's just a cryptographic set of numbers on the internet. How could that be worth anything? That's the first conclusion that Michael Saylor made, the first conclusion that I made. But then when you step back, you say, well, wait a minute, there's a big network. Wait a minute, there's only 21 million of those
Right.
cryptographs. And wait a minute, those things are going to trade at the speed of light between parties in a fully open, fully verifiable way where there doesn't need to be a third party verifying the transactions. Wow, that's revolutionary. This is going to be a very valuable network. And the components or the tokens on that network are going to represent lots of value. And in my case, I think they're going to represent $25 trillion of value, which implies a Bitcoin price of about $1 million within the next 10 years. I believe that, and I put my money there.
I believe that as well. I do agree with you. So just to, again, simplify things, Bitcoin, like gold and silver, one day someone said this is worth something. And then all of a sudden you have a network effect, which makes it even more valuable. There's 300 million wallets out there. I said 100 million before. There's 300 million wallets, maybe 500 million. So there's your network effect. So we're building a case of why Bitcoin has value. You mentioned regulation, and in your book, and you just said it, in 2014, the IRS declared Bitcoin tangible property for tax purposes. But in 1933, the government confiscated gold from people. Can the government see, Anthony, in about 2 or 3 years ago, I had said that with a stroke of a pen, Bitcoin would be gone. That's what I said ignorantly at that time. So, but can that happen? Can I mean? So now we get where you're saying with everything, but now regulation. Can the government just go in there and just take our Bitcoin, or do something that could devalue the price of Bitcoin? Because now it's a threat to central banks.
Wait, well, you have to tell me how they're going to do that. So let's take a look at the Communist Party of China. A couple of years ago, they banned Bitcoin. They said no more Bitcoin mining. They said you can't own Bitcoin in their country. They banned it. Well, it turns out that 10% of the mining is still happening in China, and maybe something like 15% of the transactions are still happening. So people just took it off the grid and they're trading it with each other and they're still mining it. So you tell me, if you're going to shut down the internet, you're going to say, okay, all the governments of the world have gotten together and they have shut down the internet. And so therefore, there's not going to be any more Bitcoin. I mean, that's theoretically possible, but I don't see how they're going to be able to shut down the internet. How are they going to shut down the internet at this point? You're going to lose all your email traffic. You're going to lose all the internet sales. There's trillions of dollars now that
Right.
are transacting on the internet. How are you going to get rid of all that? So I don't see that happening. Moreover, it's decentralized. And so I want you to think about that. Each person is a part of the network. And so what are you going to do? You're going to wipe out 500 million people, I guess. I don't know. I mean, I guess all of these things are possible, but there's a nuclear strike that could happen. That's possible. Take out all of the industrialized world. If that happens, then every asset that is in my account is probably going to be worth a lot less, if not worthless by that point. But if you're telling me we're going to have an industrialized world, and you're telling me that we're going to have economic activity in an industrialized world, and we're going to have electricity, which I believe we will, you're going to have Bitcoin.
Yeah, I agree with you. I think it would be absolutely absurd. And it's like, I think it's check the box regulation, I believe, is in check as it relates to Bitcoin. I agree with you. And so you mentioned the word, I think what sold me more on the regulation part, Anthony, or the government taking it away, is how Bitcoin's decentralized. Can you just simplistically help people understand exactly what we mean when we say that?
So your bank owns a centralized piece of currency. The currency is emanating from the federal government. And so the federal government is going to control the supply of that. It's going to be influenced by the Federal Reserve's decisions around interest rates and whether or not they're going to print more money and increase the money supply of the currency of the country that you're involved in. In the case of Bitcoin, it's a computer program. No more currency, no more tokens can be created. There's a fixed supply. Yes, there's mining going to happen now till 2140, but there's 21 million tokens. There's 1.4 or so million tokens that are yet to be mined.
Right.
So that's going to take 100 years before we see those. But there's, 19 million in circulation. Many of those coins were likely lost during the inception of Bitcoin, and they'll have to be either dug up out of landfills or lost forever. And so you have a finite amount of Bitcoin. And so that's valuable because, even gold, you can discover more gold, or a meteor could strike the earth with $1 trillion worth of gold, which will upset the supply demand balance
Right.
of gold. One of the things that makes gold so valuable is that it's scarce. Bitcoin is an extremely scarce asset. It was designed by the computer programmers to be scarce. And so now when you talk about decentralization, how is it set up? Well, there's 150,000, 200,000 nodes. You can go to bitcoin.org, set up your own node, and you can help the network verify transactions as it produces blocks and the transactions happen. There's no central authority. There's no bank in Washington that's doing that. There's no clearinghouse. Clearinghouse is disaggregated groups of people on the internet that are offering their computers and their services through the programming to verify the transactions. So there's hundreds and hundreds and hundreds of thousands of them. Again, ask the Chinese government how successful they were at banning it. Yeah, they got it banned, but 15% of the overall activity is still going on in China.
Yeah, and that goes to tell you. So, the decentralization part, it takes away from any political constraints, no trusted intermediaries. Nobody can impact the Bitcoin, which brings me to inflation. This is really an important point, I think, for people to understand. What we could pay, what a dollar was worth 40 years ago is significantly less today. We continue to debase our dollar. In fact, $4 trillion were out there in the world before 2020. And here we are today with over $20 trillion of dollars that are out there. So if you have more supply of something, the value of that obviously goes down. And what you're trying to convey to people about Bitcoin is that there's a limit of 21 million. There's 19.3 million Bitcoin out, still another 1.7 million to mine up until 2140, and every 4 years it gets halved. So that's why the process will be slow. But then that's it. So that limited amount is what's most interesting about owning this as a store of value. Do I have that right?
I think you do. I think it's excellent. I think you do have it right.
So that's what we're signing. So now, going back to what we said before, the value of the network, the regulation part we reviewed together, the inflation aspect of it, and how, dollars, and that's why, Anthony with Saylor, which, by the way, and there's a futuristic thought mindset of him and Peter Diamandis is just absolutely fascinating, because he saw that, do I want to own treasuries or do I want to own Bitcoin? And he took his treasuries that he owned in his company and bought Bitcoin and made an absolute fortune. And it's because everything that we're talking about that he saw. You want to just touch upon that? I mean, he having the courage to do something like that. And then I'm going to close it out after a couple more questions about you and your transformative move. But when you think about Saylor and what he did, and now Elon Musk followed suit, what is your view about that?
Let me try to frame it this way. Here's what I would say. I think Saylor has taken a position that Bitcoin is the operating system. It's the operating layer of the future of money. We're going to be using the rail system of Bitcoin to transact with each other. And so you're not going to need the bank the way you've needed the bank in the past. I'm not saying the bank is going away any more than the phone company went away. Look at what we're doing right now. We're making a effectively variable costless transaction over the internet phone lines. We have a George Jetson-like television going. You can see me, I can see you. We're over the internet. It's not costing us anything more, right? You have your monthly charge for your Wi-Fi and your hard-wired computer, and I have my monthly charge. So we could do this all day and all night, right?
Right.
But 40 years ago we couldn't. I had to, let's say I wanted to call my parents from Rome. I would have to go get a phone card, call AT&T. They give me 15 minutes for I don't know, $3 a minute, $45. There's the call. We don't do that anymore. I can go to any cafe in Rome and log on. So we're spending $7 trillion a year on transaction verification, whether it's wire fees at a bank. It could be a Western Union charge. I'm trying to send money to my family at El Salvador. I'm unbanked. I have cash. I give them $1,000. They take $100 for themselves. There's $7 trillion of that activity going on around the globe. But what have I told you? I had a network where you can trust the network, I can trust the network, and we can go back and forth on the network relatively costlessly.
Right.
People would use it. That's very valuable. So Saylor saw that. And so he's taken a position that he wants to own a large swath of that. If there's 21 million coins, he wants to own 1 million of them. Now, I predict if he gets there, I'll make a prediction on your show, he'll get broken up eventually by the government. The same way Standard Oil got broken up. They'll not, as Bitcoin gets accepted and gets adopted, they'll say, okay, Michael, you can't own that much. They're going to break them up. At that point, though, Bitcoin will probably be worth $2 million a coin. Michael will be worth, $500 billion. So he saw something.
I think Lee just said 3 million yesterday. I don't know. Tom Lee talked about.
I don't know where it's going, but I
Yeah.
do believe it's going to go to 1 million, and I could be wrong, but 1 million is only 10x from here. If I'm right about the promise of Bitcoin, how did Nvidia do? How did Microsoft do? How did Google do? Okay, so this is a technology like those technologies. Why can't it go 5 or 10 or 15x like Meta did, Phil? You
I
know?
agree.
So
I
so let me just make this last point because you asked a really good question. Why do that? The answer is if you're right, Saylor's point is it'll be worth 7% of all assets if he's right. Now it's worth 0.28% of all assets.
mean, that's why I think the adaptability of it, I can see it being 3%, 5% or greater, and that's where you get the increase in value. For my viewers, I want them to understand something. I think and you wrote in your book, which is really terrific as it relates to investing. If you want to make money, find a dominant digital network and invest in it, and then invest in it more. Saylor talked about that. Peter Diamandis says there are 6 Ds of exponential growth. Digitize, which is converting something physical to digital form. Dematerialize, physical products become digital or disappear altogether. Demonetize, the process of removing money from the equation. Democratization, once digitized and cheap, technology spreads widely and accessible to billions, which we see right now. Deception, in the early stages, nobody believes it. And then the disruption comes when people believe it and you have exponential growth. This is exactly what happened with Amazon and Apple and Google and what happened and why Kodak and why he believes that what happened to Kodak could possibly happen to the financial system. But Anthony, I want to go on to move on to a question that if you're a client, right, and you own Bitcoin, your concern is the volatility of owning Bitcoin. And what you talked about in your book, which I thought was phenomenal, is whether it's Apple, Amazon, or Google, you pick the company, the early adoption cycle is always volatile. And as a result, prices for those assets often soar, crash, and eventually soar again as they redefine and create new industries. Bitcoin is following that path. So the volatility of Bitcoin is really what concerns people. Just anything on that in addition to what you wrote.
Well, I'm not, again, this is the funny thing about me. And, I guess I'm getting old. I don't know. I'm not concerned about the volatility. Let's go back to Buffett. Buffett would say the volatility is your friend. If you're telling me the Bitcoin's going to oscillate for a while, but long term, what if I told you I own something called Amazon and I spent $10,000 on Amazon on its IPO in May of 1997, 28 years ago.
Yep.
And Amazon went up and down 8 times. It dropped 50% in value. One time it dropped 90% in value. But what if I told you it was in a lockbox somewhere? I didn't realize I owned it. And my $10,000 investment is now worth $17.5 million. Okay. Now, nobody did that because they saw it going up and down. They got nervous and they sold it.
Right.
One person that actually did that, Steve Ballmer. Steve Ballmer owned 1/6 of Microsoft. And he just of the 1/6 of what Bill Gates owned. Bill Gates diversified. Steve didn't. Steve is worth more than Bill Gates now. And so you have to make a decision in life. If you have a good asset, I would recommend to people, if they have a good asset, hold the asset. I think we make mistakes in life selling things too quickly. So I don't care about the volatility. I took Bitcoin at 20,000. Phil, it went to 69,000. People thought I was a hero. By the beginning of January of 2023, it was at 16,000. And people said I was a dunce. Went from hero to dope in like 12 months. Now it's at 106,000. I didn't sell a lick of Bitcoin. If anything, I accumulated more. So you tell me, is it going to go to 50,000? Might. But if you're telling me, because there's a lot of people that don't understand it, there'll be flows into it, there'll be flows out of it. But as it matures, it's going to be worth $1 million. I'll take that. Oh, and so you have to say to your client, hey, I believe in this asset. You're either a nervous guy or not a nervous guy. But if you're a nervous guy, put a few percent in. If it goes to zero and we're all wrong, it doesn't hurt you, but if we're right, it's going to 10x for you and you're going to be very happy. Pick a number where you're sleeping safe no matter what. My number's very big on that.
It was
I've got 70% of my wealth in Bitcoin at this point in my career. And I'm
so
sleeping very, very comfortably with it.
good for you, Anthony. That's awesome. So it's funny. So when you had your book and then Michael Saylor came to your party, Michael Saylor said, he goes, Anthony, and you asked him to write the forward. Michael Saylor, when he read your book, he said, the only problem I have with your book is that you recommend a 1% weighting in people's portfolios in Bitcoin. And as you know, and you just talked about with your net worth, it should be much greater than that. But in our business, as you know, Anthony, with volatility and we just got to be careful with clients' money and people get nervous and we
I'm
have
not,
to.
I'm not recommending. Look, what Sailor said, which is true. He said, Mooch, you have more than that. I actually changed that last chapter. You remember that?
I do.
I
Yeah.
changed it. I said, like, hey, this is what I have. This is what Michael has. Only do what you're comfortable with. I'm not interested in making people not sleep well. And by the way, I'm comfortable being wrong, Phil. Don't forget that about me.
Of
I am
course.
comfortable being wrong. Okay. I've made a decision. I'm in this business, my 37th year in this business.
Unbelievable.
I've got assets outside of Bitcoin. It's not my only asset, but I have made a decision that this is the stand that I'm taking. And I believe in this long term. And I think it's going to be a big part of our investment future. And I want to own it.
You're
And
37 years.
if I got it wrong, so be it. It's not going to be the end of the world for me. I'm still gonna wake up in the morning, God willing, until the day the good Lord calls me home.
Yeah, I mean, you're 37 years in the business. You said you're 60 years old. You look younger than people who are 45 years old or 40 years old. I don't know how you do it.
Oh, I mean, it's good skin products, Palumbo.
Could you maybe you could
You
team
gotta,
up?
you gotta. I mean, you're Italian. Remember, beige don't age, Palumbo. You gotta have good skin products. You gotta be properly moisturized.
We got to do
But
another. We got to
but
do another
this is
podcast.
something your clients would appreciate. Okay. In addition to that,
Yeah,
you got to do something you really love in life.
absolutely.
And I admire you a great deal. I've said this to you. You left a big firm. You built your own business. You're responsible to your clients. You're sending out weekly newsletters, which I enjoy. You've got a big resonating message with your clients that you want them to sleep safe. You want to be their protector and their outsourced CIO. And you built your own business. And I admire that enormously. And I think that is one of the great paths to staying young is doing something you really like. And also you're not fettered by a large organization to totally fulfill and meet your client's interests. And I have an enormous amount of respect for that.
I appreciate it, Anthony. Thank you very much for those kind words. And I wanted to say when we first started this podcast that you've been instrumental in helping me along the way. So I appreciate all you do for me.
Well, it's certainly my pleasure. I hope there's more for me to do for you and vice versa.
So, Anthony, I just want to talk about two other quick things, and I'll get this. I'll let you go. So, one other thing, and there's been some news. So, if I have this key, and all of a sudden somebody puts a gun to my head and says, "Give me your code." So, just talk about theft and things like that, right? So, like you said, which is really terrific. I could have $500 million in on my key. Then all of a sudden, somebody comes to me with a gun to my head. Talk me through what your thoughts are around theft and bad actors and things like that.
Well, first of all, they'd have to shoot me because I don't have a key like that. I have my stuff locked away in places like Galaxy and Fidelity and places like that. So, I mean, there's nothing I could do. They'd have to shoot me. And that's the end of me. My kids will get the life insurance, and hopefully those people would go to jail. But if you're saying that, yeah, there's risk if you have your own key and you have your own wallet, is there a risk of theft? There is. If you're saying that there's no perfect story, there's no perfect solution. No, there isn't. I do think over time there will be insurance that you'll be able to buy. I do think over time there'll be uh, services. I'll give you an example. If I buy something with Bitcoin right now, and I take it from my wallet and I move it into your wallet, let's say you sold me something and it doesn't work, or there's a good that I purchased that I don't like, or you misrepresented it. It's not like a credit card company. I can't call a credit card company and say, hello, could you please cancel that transaction that I did with Phil? And now let's dispute it. Okay. Because that Bitcoin's now left my wallet. It's entered the other person's wallet. It's gone. But I do believe there will be insurance for that over time. It'll be way less costly than a 3.5% charge from a credit card company. But I do think that that's coming. And I think that we're in a very early state for Bitcoin and it's in an immature place. So if you're telling me, yes, is there a risk you could lose your wallet or someone could hijack you for your keys? Yes, there is. So a way to avoid that is to put it in a safe place like a Fidelity or a Galaxy like I have done.
Yeah, and for people to know, if you buy it on Coinbase and you move it into a wallet, just be very, very careful. Know what you're doing. Speak to people who've done it before because it's you just have to be very, very careful as it relates to
Of
that.
course. Of course.
The
I admire your caution on this topic.
Yep. And then finally, and last question, when you first got into making this transition to Bitcoin, I got to be honest, I looked at it like, you're a Wall Street guy, traditional guy. For me, I was taken back, but obviously you're a smart guy. And I said, there must be something to this. But this is more for founders of businesses, right? Like I am and you are, and people listening. Like you making that bold move. Just, I want to know more about that, because if it was wrong, like, things could have really blown up as you talked about in the book. So just walk me through people who own businesses looking to make big moves. I mean, how do you get past that?
Well, I mean, that's it though, right? I mean, ultimately, think of the success stories that Phil. You have to make a very big move. You're working at D.E. Shaw, you're a brilliant young hedge fund manager. You decide you're going to become an internet bookseller and move to Seattle and call yourself Amazon. It's a very big move. You can't, you're working as a computer programmer. It looks like you can get an operating agreement with IBM. You're going to leave and start something called Microsoft. Pick the company, pick the people. They have to leave. They have to take very big risk and they have to go into something. Now, if you have high conviction and you're willing to work very hard, you can mask over a lot of mistakes. And so what I would say to you is I had high conviction in this. I believed in it. I saw it early or early enough. And if anything, I don't have balls like Michael Saylor. I would have dug deeper into this thing if I was Michael Saylor. So I said, okay, this is what I'm comfortable with. This is the amount of Bitcoin I can own for myself and my clients. And let's see if it works. If it doesn't work, I'm going to have a lot of egg on my face. I'm going to be sanctioned as a failure. In 2022, May, Bloomberg wrote a very negative article about me. They said I got this wrong. I'm going to go out of business, and I'm a miserable loser. They didn't write the day they wrote that. I've gone 5-1 on the capital, so they didn't write the subsequent story. Hey, we said the guy was dead, but he's not dead. He's 5-1 on the investment bet, and so again, and if I were your client. I'm not telling your client to do what I did with my money, but I'm telling your client to have a little piece of what I did. You're the Mayo Clinic. I am like a drug company or a drug tablet, meaning you're the Mayo Clinic. The client comes in, they want an evaluation by Phil and your team of their financial health. And then you make that recommendation to them. And one of the components of the thing, maybe it's exercise or eat right or take this anti-cholesterol medication. My point is I am a piece of it. You're the holistic thing. Do you see what I mean? And so we
Absolutely.
think about the things differently because I have to provide one thing as a specific asset manager. And to me, it's a growth thing and it's a thing that puts my clients into the future. And by the way, I work with money managers like you from all over the country, registered investment advisors, wirehouses, and those people that have put money with us are generally happy.
Absolutely. So, Anthony, this was absolutely phenomenal. I was so excited to do this today with you, with your knowledge, expertise, perspective. Your book was phenomenal. Highly recommend people go out and purchase it if you really want to get involved in this space, which again, I do highly recommend. So thanks for your time today. I appreciate it very much. Look forward to another lunch at Brian and Cooper soon, hopefully.
Yeah, that would be great. I love that. I enjoyed, unfortunately, my dad, he used to see you over there when I was taking my dad to lunch over there. My
Yeah,
dad,
yeah.
he had an awesome life. He passed in September of 2023 at age 88, but that was a very fun place for him to go. And it was always fun to see you and your family over there. So we'll do that again soon, I hope.
All right. Sounds good, Anthony. Thanks again. I appreciate it.